the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares fell today as investors continue to pass through more earnings and corporate developments out of the country. So if we look at the Straits Times Index, it was down 0.15% at 4,233 points at about 12:23 p.m. Singapore time, and that is with a value turnover of some 700 million Sing dollars seen in the broader market. Now, as we shared with you earlier in the news, the STI ended in the red as well. So let's take you through the closing numbers. So the Straits Times Index closed down 0.17%. We're looking at 4,232 points. Now, in terms of value turnover, that's 1.37 billion Sing dollars. Gainers outnumbered losers, though, 279 versus 254. Top advances for today, we've got for you Avaga Limited, Hopa and Venture Corp, and top decliners, we've got GMHUSD, Semco Industries, and Asus. Now, in terms of companies to watch, we have Keppel, because Keppel announced today its proposed divestment of M1's telecommunications business to Simba Telecom, and that is for an enterprise value of around 1.4 billion Sing dollars. Now, also from how Nvidia and AMD have reportedly agreed to give the US government 15% of revenue from sales of advanced computer chips to China. To what to watch ahead of the US-China trade truce deadline, we've got more international and corporate news in focus. Now, also on deck, how Intel's chief executive Tan Lip-Bu is set to make a trip to the White House after US President Donald Trump called for his resignation last week. Now, lots to watch, and joining me on the line on a Monday is Chin Hui Leong, co-founder from The Smart Investor. Chin, welcome back to the show. So good to speak with you.
Hi, Tintin. Glad to be back.
Great to have you on. And Chin, let's start with the Singapore stock market as usual. How did the STI fare today? Any surprises when we look at the biggest movers and, of course, the sectors that they lie in, given the slew of earnings out thus far?
Yeah, so I was looking through the entire list of the STI just now. And I think, as you mentioned, there are gainers and losers. Not much which jumps out. I did see Samcorp drop by, I think, a bit more than 3%, right? And I think this is just a continuation from the major decline which it suffered last Friday after it reported its results. So I believe that this sort of reaction was just sort of like follow-on downgrades coming from the analysts and brokerages.
And Chin, let's zoom in on some of the companies to watch. Earlier we talked about Keppel because it announced its proposed divestment of M1's telco business to Simba Telecom for an enterprise value of around 1.4 billion Sing dollars. That move sent shares of StarHub down nearly 5% earlier because it dashed hopes of a potential takeover of M1. So how would you read into the move today and also investors' reactions?
Yeah, so I think to understand the context of what is happening today, we do have to go back around a decade ago, right?
Okay.
And back then, there were three major telcos, right? I'm old enough to remember that. And no prizes for guessing who they are. It's Singtel, StarHub, and M1. Right?
Yeah.
And at that point, I think what I remember is the regulator felt that the competition was not intense enough. And they decided to add the so-called fourth telco, right? So they put it up for bid, and then somewhere late in 2016, a company called TPG from Australia actually won the bid, and today it's called Simba Telecoms, right? So when you look at what happened like a decade ago, where they felt that the three telcos was not enough competition, and they added the fourth, this when you put it back, it's like going back a decade ago, right? You're going back from 4 back to 3, right? So my first question is, how do regulators feel about that, right? Now, of course, I want to be fair also, because today, I think the competitive landscape has changed.
Yeah.
Right? Because there's MVNOs, there's there's a company called Giga, which is supposedly a digital sub-brand of StarHub, right? So, and I also want to reflect my own experience as a telco user, right? Because speaking as a consumer, I only pay like $15 per month, and they've been giving me more and more things for free, right? I used to have like 50 gigabytes of data, and then they just gave me, I think increased it to 300 gigabytes, amount which I will never finish using, right? And did they charge me extra? No, they didn't, right? Then what did they do next? They gave me another 6 gigabytes of roaming data so that if I travel to Malaysia, I can use it. And do they charge me extra? No, still $15 per month, right? Without GST, of course. But then, I think like 2 months back, they decided to upgrade my 4G service to a 5G service. Did they charge me extra? No, they didn't, right? It's still $15 per month, right? So, when I look at this as a consumer, of course I'm happy. I'm glad I'm to be receiving all of this, freebies with no extra charge, right? But if I sort of take off my hat as a consumer and put on my investor hat, to paraphrase PM Lawrence Wong, these are not the actions of a company with pricing power, right? So it does raise a lot of questions. What do regulators think about this? Does this really help the competitive landscape? And maybe as a consumer, the best sign is that if my service provider stops offering me freebies, then maybe they have gotten back some pricing power. So that is what I'll be watching.
Do you think the movements in StarHub, down 5% earlier today, is justified though?
Yeah, I think...
Because going by your logic, if I may, is that if there is going to be a takeover from 4 players back to 3, that it would raise some eyebrows, right? Yeah. So I think that this is not an easy question to answer because there's 4 parts of the business to StarHub, right? Yeah. So there's the telco, which is just one part of it. Then there's the broadband, there's the enterprise business, and then there's the pay TV business, right? So we're just talking about one part of their business. So it really depends on how the other businesses hold up. Because, for example, if you talk about broadband, everyone's paying the same price to Netlink Trust and BNB. So the pricing power there is everyone's paying the same cost, right? Okay. And then you have pay TV where there's competition with Netflix. So it's not a sort of cut and dry question to say that this one factor would cause the shares to fall and so on. I think we have to see how it plays out and whether or not this actually, gets the company to be less competitive and give them back a bit of pricing power. We'll see how it shakes out. Okay. Then another counter that we want to keep our eyes on for today, Chin, is Thomson Medical Group, because on Friday night, Thomson Medical Group announced that it expects to record a post-tax loss for the 6 months and the financial year ended June. Now, it cited higher interest expenses from its Far East Medical Vietnam acquisition, cessation of projects in Singapore, and a weaker performance in Malaysia, partly from the termination and discounts of certain insurance contracts as primary reasons for the dip. How concerned are you about this?
Yeah, so what they issued on Friday was something called a profit guidance. Yep. But I think if you are being candid, it's really a profit warning, right? And the thing about these statements are that usually companies would issue a profit warning when they expect to record a loss or amount of profit which is far below what is forecasted, right? So that is what usually companies issue these statements for, so that when the actual results come out, there's no surprise and so on. Now, I want to be fair. This happens to even some of the best companies. It falls short, something unexpected happens, and therefore they have to issue a profit warning, right? But the problem for Thomson is that this is the second time they have issued this in 2025, right? Back in January, they actually issued the same profit warning where they say they expect to record a loss. And I think the sticking point here is 2 of the matters which they raised up, just as you mentioned just now, the higher interest rates and the cessation of Singapore projects. So I think that is really the sticking point and why shares have really reacted strongly to this, profit guidance. Is because it does seem that the issues which they're having are not being solved yet, and therefore they have to issue this profit warning again, which I think that is the question in investors' minds.
Okay, now if we look at shares of Thomson Medical, down 11.321% at the close, quite a sharp drop there. But if you're just tuning in, we're now in conversation with Chin Hui Leong, co-founder of the Smart Investor. Well, Chin, across the region, Asian markets mostly higher today. Investors there hoping or expecting U.S. President Donald Trump to announce an extension of the trade war truce reached with China last month. This is ahead of the 90-day deadline due to expire tomorrow. Also in view is a high-stakes summit between Trump and Russian counterpart Vladimir Putin on Friday in Alaska. How far have these events boosted investor sentiment today?
Yeah, I think, Tian Tian, I have to be candid here, right?
Okay.
Because for me, it's really a paradox, right? Because it's, on the one hand, you want to take matters like this really seriously. And the reason why you want to take it seriously is because tariffs have an impact on businesses, right? And the real impact, and companies have to pay these tariffs, right? But on the other hand, you can't really take the Trump administration's word for anything they say, right? They say they have made some deals, but they're really frameworks. They made a deal with Japan, and then somehow it's missing from the executive statement, and then now it's supposedly a regrettable error that they missed it out. So it's like, how do I take your word for it when things keep on changing, right? You make a deal, and then it changes a week later, right? And then you're making random threats based on political leanings and so on. So it's really hard because I think that investors have to avoid themselves getting pulled by the nose by all these changes, because you can devote a lot of time to analyze and try to figure out what the Trump administration is doing. But really, I think the better way is to really just focus on what businesses are saying, right? And I think where really the rubber hits the road is when the second half of the year kicks in and companies start reporting the third quarter earnings, because I think that's where the impact of these tariffs will be really felt and seen.
Okay, so you're saying that the movements is more of a knee-jerk reaction, and what is more important is what comes in the second half of the year when we're seeing the full impact of the tariffs. Is that right?
Yes, correct. Because I think until right now, first quarter, there's no impact at all because the tariffs were announced in April. Second quarter, you see a bit of impact, but not that much.
Okay.
It's still quite tame compared to what could happen in the second half, unless they change their mind, of course.
I know you talked about wanting to be candid, but let's put on our slightly more serious cap and look at this one. Right. I think it's quite interesting there because Nvidia and AMD, they have reportedly agreed to give the U.S. government 15% of revenue from sales of advanced computer chips to China. Now, any thoughts on the move, and how concerned are you about the blurring of lines between revenue generation for the U.S. versus protecting national security? How far does it add another layer of uncertainty to investors?
Yeah, so, I think this is sort of a continuation from the previous question. And the thing here is, I think you're pointing out all the right points, and you're asking all the right questions, Tian Tian. Because recently we had a member ask us, what's the end game for Trump, right? And our answer is, I don't think even he knows what's the end game, right? It seems to change all the time, right? Initially, the Nvidia GPUs were restricted because it's a matter of national security. And then they relented and allowed the H20 chip sales to proceed in China after negotiation. So does this mean that, those national security concerns are gone now? We do not know. And then they're still yet to come up with an agreement in China on tariffs, right? So this 15% charge does feel a bit like a roundabout way of charging 15% on China for all these H20 sales, GPU sales from Nvidia. And I don't know how China will feel about it. Will they retaliate? This might not be the end of the story.
Okay, and finally, I know you talked about wanting to be candid. I think this question is also a continuation from our previous question because it has to do with Intel CEO Tan Lip-Bu and how he's set to make a trip to the White House after U.S. President Donald Trump called for his resignation last week over what I believe was called conflicts of interest. So what do you make of the move then? What are you watching ahead of the meeting?
Are we talking about Trump again? Okay, let's do it anyway.
Okay.
So Mr. Tan Lip-Bu, he has written a letter which is published on Intel's website.
Yep.
And within it, he said that he has been a citizen of the U.S. for 40 years, right? And I think what's interesting is that he's actually the CEO of a company called Cadence.
Yes.
And this was from 2009 to 2021. I mentioned these dates because this actually overlaps with Trump's first term, right, which is 2016 to 2020, right? Now, when Mr. Tan was at Cadence, he helped turn around the business from 2009, which was the great financial crisis, and grew it into a significant player, in fact, a duopoly in the area of electronic design automation, right? These are software used to design semiconductor chips. So there is an influence by Mr. Tan on the semiconductor industry itself. And somehow, it wasn't a problem in his first term, and now it is a problem, which really begs the question, is this just another political hot potato which is getting passed around, a topic du jour which Trump is reacting to? And for me, it's not like Intel doesn't have any problems.
Yeah, I was about to bring that up.
They have burned through close to $13 billion in free cash flow in the last 12 months. They have debt of, according to my calculation, roughly about $30 billion in net debt. And, you're burning another $13 billion over the past 12 months. So, to me, this is all a really unwelcome distraction, right? So, I do not know how this will play out, but definitely, it's really a distraction from Intel, which has their own problems to solve.
I see. Lots to watch indeed. Thanks so much for the candid chat, Chin. That was Chin Hui Leong, co-founder of The Smart Investor. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.